This Week in Money is archived online at talkdigitalnetwork.com.
David Morgan is our guest. He is our go-to guy on silver. You can find him at silver-investor.com, home of the Morgan Report. He's also on YouTube. He is on Twitter at SilverGuru22. Hey, David, it's good to have you back on This Week in Money.
I feel it's great to be with you.
Fed says it's going to keep interest rates at basically zero until unemployment falls or hell freezes over, whatever comes first. Now, that's obviously bullish for precious metals, and especially for silver, right, Dave?
It is. There's no doubt that, at least from a historical perspective, that silver, not gold, but they both do well, has done better under these kind of conditions than any other commodity. And that's not me saying it. Basically, one of the best studies done on the topic was done by Professor Roy S. Jastrom, called Silver, the Restless Metal. And in that study that took in hundreds of years of commodity prices versus what gold and silver did, what he concluded was in an environment like we're currently experiencing, that silver outperformed any other commodity. So if history repeats, and I'll use the word if again, I think we'll expect to see silver far higher in paper terms over the next, 2, 3, 4, 5 years. I really, Phil, can't see this thing going 5 years, personally. All things have a limit. The amount of money that you can pump into the system before people tire of it or give up on it, it will reach a limit, and when that is. And, my detractors will state, that, we're in this huge deflationary mode and that paper is going to be king and that, gold should be shunned and, paper's the way to go. One, they don't really understand history because it's never happened ever. I mean, Voltaire had it right. All paper currencies eventually reach their intrinsic value of zero or close enough. And secondly, I think the bigger point that they're missing is you don't have to cover all the outstanding debt with paper. In other words, what the Fed has already committed to, another $45 billion on top of what they're already doing, is roughly $1 trillion a year of funding money pouring into the system. At some point, it, again, doesn't have to be 100% cover ratio. At some point, people will catch on to what's going on and say, enough is enough. I want out of paper and into something real. And the only thing holding that back right now is the velocity of money, or actually it's the velocity of money and, this is my take on it, the velocity of money and the ability of the consciousness of the public and or entities to wake up to the truth. And the truth is you can't print your way out of this. You cannot have a debt-based problem and then get out of it by increasing the debt. It's ridiculous. And yet the markets are still kind of trudging along, pretending as if everything is going to be okay. And that's based on today. I mean, that could change overnight. That's how volatile this thing could become. I'm not predicting that. Usually you get a slow momentum build, and then there's a turning point or tipping point, breaking point, call it what you will, and all of a sudden the velocity starts to increase. And once that happens, it's almost, in fact, from history, it's impossible to turn it off. So once, your neighbor goes down and decides you'd rather have a jar of peanut butter than a fistful of loonies and toonies, look out, because then his neighbor says, you know what, that's not a bad idea. I want the same thing. And, of course, I'm basically talking about the U.S. dollar, but it's gold and silver going up against all currencies.
Dave, gold and silver, pretty typical this week, jumped ahead of the QE announcement and then sold off. So how come gold and silver bulls are scratching their heads at the sell-off?
I forecast that it would happen. I said, look, I wouldn't be very surprised to see the markets sell off on the announcement. And this is only from, 30, 40 years in this sector.
Yeah.
And I've seen it again and again and again where you would have the most bullish news for gold, and the gold price would get whacked down. I think part of it is psychology. I mean, most of the gold bulls and silver bulls look at this QE announcement as being very bullish for the metals. I think long term it is. I think intermediate term it is. But one day doesn't make a market, and there's people out there, believe it or not, that have the authority by law to intervene in the markets. It's called the Working Group on Financial Markets. Look it up on the internet. I'm not making this stuff up. And these people can come into any market that they choose and basically manipulate them. So it wasn't any shock to me to see that gold and silver prices sold off. And then, of course, there's a lot of mainstream news that I'll comment on in my weekly column. That's my free e-letter that will address this about the same level we're doing with you, Phil. But it just is ridiculous, and don't get all panicked about 1 or 2 or 3 days of a sell-off, because it's obviously counterintuitive. And from my perspective, it's just sort of a psychological defeater. is to get the people that think that they want to buy at this point to not. It's like, well, it should go up. It didn't. Something's wrong. I won't buy it. Mm-hmm. So it's a psychological warfare as far as I'm concerned.
Now, we talked about the manipulation issue before. Hard to believe that it's not manipulated. You look at silver, we're down to a 4-week low, trading at 32.5 an ounce. What's going on here with silver?
Well, the end of the year last year, the lowest point, I think, was around the 24th of December, if I remember correctly. What I do remember is that a big fall off in December. Looks like we're getting that 1 year cycle again for whatever the manner it gets there, manipulated or not. That looks like where we're probably heading. Probably get some people mad at me because I've been saying, 35 to 40 by the end of the year. Well, we certainly did hit 35 before the end of the year. And I thought probably close out December in that range. Probably not now. We only got a couple weeks to go. Volume is very light. Most of the big traders have left. Mm-hmm. So, it doesn't concern me that great a deal. I mean, what people don't understand that they hear shows like this, and I'm very happy to do them, and that, is the updates that I do for my members only are much more in-depth, and the analysis is deeper and also very much based upon the market itself. So I basically have already, weeks ago, put out for the members only what to look for. And I said what to look for on a down. I said, I don't know what the market knows. I've always had that position. And if the market does this, and I drew a line, then we know what to do. And if the market does this, which we're getting close to that line, then we also know what to do. And that's where we're at. We're going to, looks like, fall off. And again, it doesn't concern me. The long-term trend is certainly intact. It's a time of year that most people focus their attention on other things. Volume is light, and light volume markets are very easy to move around.
It's always good to be able to filter out some of that extra noise, right?
Absolutely. And the way I trade, and, it's more than trading. I mean, I invest and trade, and I basically have services that cater to people that want to just buy and hold and invest, and they don't really worry about these intermediate term moves. And then I have people that invest and trade like myself, and they do worry about these intermediate term moves because they can make money if you are successful. And I have been, and I've shown that time and time again. Does that mean every trade is successful? No. But again, it shows, the discipline that's required. And again, I said, look, I don't know which way the market's going to go. I think it's going to go up, but the market knows. If it doesn't, again, breach this level, then obviously we're probably going to see a sell-off to the end of the year. And again, that's where we're at.
We're talking about the death of fiat currencies with David Morgan here on This Week in Money. Here's an interesting stat I just found. QE1 kicked off 4 years ago Sunday, and back then an ounce of gold cost $837.50, about half what it is now.
Absolutely, Phil. Yeah. I mean, the trend again is in place, and you get to the point where the QE has very little meaning. I mean, I hate to say that, but it's true if you look at history. I mean, basically you can flood the market with liquidity and re-liquefy the banks, but there's no stimulus to the general economic activity. In fact, it's still contracting in a lot of sectors. Some are being stimulated, but very little. So the overall trend is still contraction, even though they're adding more and more money. And remember, during the hyperinflation, the Weimar Republic, the cry was, and believe it or not, the cry was, there's not enough money. The cry all the way up to the end was, there's not enough money. Can you get that? And this is what we're repeating. Yeah. The cry is, I'm broke. I don't have enough money. I need more money. Let me borrow more. Well, you can't borrow anymore. And so, Helicopter Ben will be there to the rescue. But in my view, he really doesn't see. And maybe he does. I can't really speak for the man. But the problem is this thing could get out of control pretty quickly. He's made very strong statements that if this thing starts to inflate quickly, he'll be able to contract the money supply and put the brakes on, and everybody will be happy. I have some doubt with that statement. I'm not so sure he could. But, again, I'm not going to be a know-it-all here. I am very, very concerned with the situation at hand, and I'll be quiet and say time will tell, but experience is the greatest teacher of all, and the lessons have been well learned in the past, and I expect to see the future, unfortunately, unravel more in a more dramatic way from the aspect that this is a worldwide phenomenon this time. This isn't just Weimar Germany. Okay. This is the world. So I'm not saying it's doom and gloom and it's the end and all that. That will happen, although there will be a rebalancing of money to assets. And that's what always takes place. There'll be a rebalancing of money to assets. It's that simple. And I favor the blow-off top that Mises talked about. And at that point, there'll be some kind of a readjustment, and things will settle down. And I don't know if that's going to be 1 week, 1 year, or 10 years. I don't think it's going to be a week, and it may take a year or so, probably a couple, and things will be rebalanced to assets and money, and there'll be stability, and things can go on. But we're not there yet, and I think that date is probably 2 or 3 years away. Again, as I said earlier in the show, I don't see it going 5 years. I don't think you can keep adding debt to a debt-based system and have it not blow up before a 5-year time frame.
David Morgan, our guest here on This Week in Money from silver-investor.com. I saw this on Minionville earlier this week. It kind of intrigued me. When silver outperforms gold, it means money is starting to bet on an increase in industrial production. You think that's true?
Somewhat true.
Yeah.
I mean, there are two sides of silver. I've always admitted that. There's the industrial component and the monetary component. And it is very much used in industry. I would use copper more, though. I think copper is the one that really tells that story more than silver. Although, we do have to look at silver more and more as this society continues to become more and more high-tech and more electronically based. But nonetheless, copper has not made a new high. I wouldn't really look at that as being a leading indicator as much as I would copper. But, certainly it's worth looking at. Is it true? Partially true. I wouldn't put a lot of weight on that statement.
Dave, let's talk about gold and silver equities, the gold and silver equity market. We know that the GDX and all the other ETFs and the prices generally have been pretty beaten up as of late. What's the outlook here? What are we looking at going forward for mining stocks?
Well, I'm tired of saying it, and I know that people may be very disheartened, yours truly included.
Yeah.
They are so undervalued, and I called the bottom. So far, that bottom hasn't been breached. I told our members only that I do think we could see that bottom tested and bounce off that. I don't think it'll get worse than that. Again, time will tell. But, it's really hard to convince people to buy low. I mean, they all know it. They all say it. They all parrot it. Buy low, sell high. But when you're at a low, people are remiss to buy. And unfortunately, because this is the time to just suck it up, be tough, have some conviction, and buy. It doesn't mean you buy everything at this point because it could go lower. And do it, as a professional. Do it slowly over time and don't get ahead of yourselves. And just be patient. Sometimes the market really tests your patience, and this is one of those times.
Dave, impossible to predict what's going to happen in 2013. We know that there will be more quantitative easing. We know that there will be more money printing. Is there anything that could make mining stocks, for example, go the other way?
There could be. I mean, if we got a huge sell-off in the general equity market, and I think that's very much a possibility, then we could see the mining stocks get hit along with the general equity market. In fact, that's normally what happens. If that were to happen, as I've said to my members, I wouldn't expect to see the lows. I would expect to see the lows tested, but not breached. But again, time will tell. So in other words, the low that's already been in place would probably, and I say probably, hold. But it might not. And if that were the case, then obviously once that low has been taken out, the downside, then being a pretty good technician, and this is just basic technical analysis, you would have to say, look out, where's the bottom? And, of course, at that point, no one knows except the market. So it's something to be aware of. I mean, a lot of people ask me, how to hedge that. In fact, we did that on a webinar just the other day. There's lots of ways to protect yourself if that were to occur. And you basically got to think ahead of the market. It's like flying an airplane. You just don't look at the landing strip and then just, stop midair and come crashing down. You got to think way ahead. How far out are you? What your descent rate is? How you're going to line up on final approach and all that stuff. It's the same thing here with investing. You've got to say, okay, the possibility exists that I got in at this time, and I could either put a stop of this percentage, or I can buy a put, or I can sell a covered call, or there's lots of options that can be taken advantage of. And it's just basically good maintenance of your portfolio. It's nothing more than that. But people, sometimes they just kind of put it on autopilot and go to sleep and then forget that the airport's ahead.
David Morgan, our guest here on This Week in Money. We're talking about gold and silver, and let's talk for a second about coin sales. That's always interesting to look what's going on with coin sales. American Eagle silver bullion coins. They have sold over 33 million ounces of silver eagles in 2012, and that's an interesting sign, right?
Absolutely. I mean, you hear a lot about, I'd say, the mainstream financial guys, and even some that are supposedly or purportedly in the sector, talking about, investment demand is, waning, and, if the facts, fact, what are these guys? And, we're somewhat friendly, but one of his favorite sayings, and it's one of mine, is, you're entitled to your own opinion, but you're not entitled to make up your own facts. Well, I'll throw back at them. The facts are that for, many years after the Silver Eagle program was started, the most sold was around 10 million. And the last several years, we've seen, the 20 million, 30 million type of sales. So the trend is up. The investment demand is up. That's a fact, folks. That is the fact. So I believe it'll continue. Again, going back to what we started the show with, Phil, if we look at what happens in a debt-based system and trying to bail yourself out by borrowing more money, which is ridiculous, more and more people wake up to that fact, and they also wake up to what's the best asset class to hold. And really the best asset class to hold is the precious metals. It's been that way. As I said before, Professor Jastrom proved that in his exhaustive study. So you don't need to read that book. You don't even need to listen to me. I mean, common sense will tell you that, something that's been money for thousands of years, like silver and gold, both will be probably the most sought out asset, and it's going to hold true again. Sales of these coins are showing that, it's proving that statement, and the trend is up. More and more people are waking up to the fact that something is drastically wrong with the financial system on a global basis, and they are, taking action that will actually help to protect them.
If you're interested in buying some bullion, here's a couple of great tips from Mike Bernick over at Uncommon Wisdom Daily. Number 1, talk to your financial advisor. Number 2, think about things like storage. Number 3, avoid anybody who doesn't offer a delivery option. Shop around, and most important, watch for fakes. Is that kind of a problem out there in the bullion market?
Well, it's funny. I just listened to a video this morning on fake gold. There's more fake gold than there is fake silver. Not that there hasn't been some in the past. There has. But it's not a big problem, but it does surface. On the gold side, I'm really not studied enough. I've read stuff on the internet, and it's hard to vet it. It's hard to know if it's absolutely the truth or not about these tungsten bars. I'm sure there are some. The question is how many, and that's, TBD, to be determined. Yeah. I don't know. That concerns me, but I'm not well-heeled enough to buy gold in bar form. I only buy it in coin form. And probably most of our listeners only buy it in coin form. But, a lot of these storage facilities that have, access to the gold in one way or another, or let you debit against an account or whatever, hold bars. So it's something to be aware of. Does it happen? Yes, it does. How pervasive is it? I don't know, but be aware of it. What was the other part of the question, Phil? I'm sorry.
The delivery option. How does that work?
Well, delivery option is like one that I like that's available for Canadians, and that's silver123.net. That's www.silver123.net. That is one that's a dollar cost averaging program, but you can take delivery or store it or both. And I really like that. And that's what this gentleman is referring to on the Wisdom site that you referenced. You might want to store it, like let's say the Physical Trust PSLV, Sprott runs. You can have your metal in their trust, stored there at their facility, in their vault. And then if you so choose, you can have it delivered. And I like what he says. I mean, anyone that says you can take it and get it delivered, I think is on the up and up. At least it's certainly a step in the right direction. But anyone that's just storage only, or don't worry, trust me, we have your silver. Don't worry, trust me, we have your gold. I'd shy away from that. Unless, of course, it's like, let's say, the SLV, which is not so much the fact they don't have the silver, which they probably do. It's just how many times has it been hypothecated, has it been loaned, has it been swapped, has it got liens against it, that type of thing. And in that case, if you want to use that as a hedging vehicle, I really don't have a problem with that. But, what really is your physical, you either want to hold it in your hands, and if you can't, for various reasons, you want to be sure that the storage facility that you have it in allows you to, grab it at any time. And and I did a whole lecture on this in our mastermind series
Okay.
about, allocated, unallocated, segregated, what the bond is, who's insuring it, at what level do they insure it, what's the access, is it held by a counterparty or isn't it? I mean, it goes on and on and on, and really it seems so simple that, I give you this metal and you lock it behind a vault and it's mine, and in theory it's very simple. Unfortunately, man can complicate things, and these contracts can be quite involved in what really takes place if you really want to get your metal out. Sometimes it's very simple. In other cases, it's not. So you've got to read the contract. If you're not willing to read the contract, it would probably pay to have somebody read the contract for you and explain it to you, because there are some situations out there that are rather convoluted or underinsured or both. So it really does pay. I actually put that mastermind series up on the web for anybody that wanted to pay to hear this dissertation and get the transcription. And we actually had about 4 or 5 people that did that, because if you're storing a significant quantity of metal, you want to be darn sure that that metal's not only there, but it's yours and yours alone, and it's not encumbered in any way. So I probably belabored the point, Phil, but a lot of people, just bothers me. They'll buy, they'll shop around and buy the best deal on coins, and they'll buy the best deal on storage. And sometimes the best deal, meaning cost the least, is not the right move.
You can find David Morgan at silver-investor.com, home of the Morgan Report. Check out Dave's YouTube channel, Silver Guru, and his Twitter feed, Silver Guru 22. Don't forget, also, David is at the Vancouver Resource Investment Conference in our town, January 20th and 21st next year. Information at cambridgehouse.com. Hey, Dave, thanks for your time. Always fun.
Well, Phil, thank you.
Thanks to our guests, John Rubino and David Morgan. And thank you for listening. I'm Phil Mackesy for AmericanManganeseInc.com. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.